Bloomberg Audio Studios.
Podcasts, radio, news.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Alix Steele, Paul Sweeney here. We do have some breaking news from the Supreme Court. The Supreme Court upholds U.S. gun ban in domestic violence cases. Whether to strike down this federal gun ban for people subject to domestic violence restraining orders was the point in question. Let's go right now to June Grasso, who covers everything law and legal for us for Bloomberg Television and Radio. June, can you walk us through this?
Yeah, sure. So this is a case where a man who was subject to a domestic violence order wanted to get a gun, and there is a federal ban on that. But the Fifth Circuit, which has been pushing the law farther to the right than even the Supreme Court likes, said that's unconstitutional. And during the oral arguments, this is not so much of a surprise because during the oral arguments, a majority of the justices seemed to think that it was this kind of restraint on owning a gun is logical. I mean, the case was really bad for the gun lobby because the guy had, gone out into public and shot the gun off, and there was this restraining order. So what they're saying is, in this case, you can stop someone from having a gun. Gun restrictions have been up in the air for years since the Bruen case, the New York case, where the Supreme Court sort of toppled the way the courts analyze gun restrictions, and they base it on historical. So you'll see gun cases where they're talking about, well, was there something like this in the 1800s? It's sort of a crazy way. For me, it's a crazy way to do it.
Does this open a path for common sense gun legislation then? Because one could argue this seems like pretty good common sense. I wouldn't want someone who's convicted of domestic violence having a gun. So if that's okay, can't we also say someone who has, I don't know, criminal record?
Bump stock, maybe?
Yeah.
See, that's what I mean. I don't think it translates with this court. I think this is sort of an exceptional situation because we had that bump stock decision where they said even though it operates like a machine gun, the way it functions, they use the term function and they use the dictionary to analyze what function meant, Justice Thomas. So, it would be nice to think that was the way that we have common sense gun regulations, but I'm not sure that that's what this stands for.
Well, I mean, at the end of the day, it says that, the Second Amendment isn't so broad that it protects the gun rights of those found to be dangerous. So now are we going to get into a situation where we have to define dangerous and what constitutes a human being dangerous? Is that what is going to come up now?
I mean, I really have no idea how this is going to play out because it's one case. It's a case where the Fifth Circuit went out on a limb. And there are like more than 10 cases, I think, this term where the Fifth Circuit went on a limb and the Supreme Court almost has to take the case, even if they don't want to take the case, because otherwise you have this, sort of abnormal law in place. So it's hard to say what the effect will be. I'm sure that in other gun restriction cases they'll use this to try to show that there are there are ways to get around it. I'll have to read the decision to see exactly how it came down, and it's by the Chief Justice. So that's a sign that it's not going to be one of those radical, hard to understand decisions by Clarence Thomas, or it's going to be sort of down the middle as you can get. So because he writes sort of reasoned opinions. So I think that, and I think that this is one that we expected, but still a big case. It's 8-1. I noticed Justice Thomas dissenting. There is not a gun law that Justice Thomas wants to see. No, really, he is. Consistently, he's the one who wrote that opinion, as I mentioned, on the Second Amendment that broadened the Second Amendment to being able to carry handguns and the restrictions that New York put into place, throwing them out. So I mean, there's just not a gun law that he will ever say is. All
right, we should note that Michael Bloomberg, the founder and majority owner of Bloomberg LP, the parent company of Bloomberg Radio, is a donor to groups that support gun control, including Everytown, for gun safety. So again, as you mentioned, June, 8-1 ruling. Does that surprise you?
Not really.
Okay.
I mean, the surprise
that
is that
shows how-
Thomas didn't. The surprise is that even in this situation where you have a guy with a domestic violence restraining order threatening people, even then he said that he doesn't want any restriction. That's the only surprise. Otherwise, from the oral arguments, it seemed pretty clear that there were a majority of the justices that were going to allow this particular ban.
And we've been talking with June Grasso right now about the Supreme Court upholding the U.S. gun ban on domestic violent cases. It's an 8-1 ruling, as Paul was just mentioning. The justices saying the constitutional Second Amendment isn't so broad that it protects the gun rights of those found to be dangerous. Justice Clarence Thomas was the lone dissenter. Okay, June, did we learn anything else today from the Supreme Court? They're like 5 days and ticking,
so
right?
I when we were talking before, I said there are 19 cases, and basically 14 of them are controversial. And so today they came out with 5 decisions, 4 of which were not controversial at all, that we're really not tracking. I mean, some of them are interesting. One was about whether a U.S. citizen has a constitutional right to have her spouse declared a citizen. So that's an interesting case, particularly in light of what Joe Biden did this week relating to allowing spouses who are married to U.S. citizens who came to this country illegally to stay in the country while they go through the process. Normally they'd have to go back to their home country, which is really risky. So it's interesting, but still, so we have 1 week left. So far, 1 decision day on Wednesday. I'm sure they'll have more coming up. They'll set more. But so we have all the cases left: presidential immunity, the January 6th obstruction charges, the Idaho abortion ban, the homelessness issue, Chevron case, which you mentioned before, the cases on social media, the case on Purdue Pharma, air pollution, SEC.
Why are they waiting, do you think? Is this typical?
All right, so it is typical. But so I was talking to a professor yesterday because I was questioning why they're all, and I always feel like they're waiting until the end and they get them all out at once and it gets lost in the ether. You can't cover everything at once. And but what people say is that, well, the more complicated cases with like 6-3, there'll be dissents, there'll be concurrences, and then they have to pass those around the justices, and so it takes longer. But this professor I was talking to, Harold Krantz, said, he thinks that the chief is holding them. And because if you notice, yesterday there were 4 cases. 3 of them were about criminal procedure. They were grouped together. So it's odd to me that this is just haphazard, random. They all come out. And the Rahimi case, the case that we had heard today, was one of the oldest cases. It was heard in November. And usually you can tell how the cases come by when they're heard. So think about the Trump case. It took about 20 days on the last Trump case having to do with the ballot. We're up to like 40-something now on the Trump case.
Okay.
So it's a
All right, we'll pay
mystery
attention
to
next
me.
week. Okay.
Oh, we'll be here.
We'll be here.
We'll be
Ooh,
here.
but you're
I'll
off
be here.
Friday.
Off Friday.
All right.
Oh, that's going to be a big day.
That's gonna be a big day?
Maybe you wouldn't want to take it.
I'm gonna prep. Now I got to double prep now. All right. June, thanks a lot. June Grasso
Sure.
joining us to help break it down. Just to reiterate, the Supreme Court upholds the U.S. gun ban in domestic violence cases. I should point out, Smith & Wesson shares are sliding over 12%, but that's also because they said sales in the first quarter would be 10% lower year on year than originally thought. So if you're just looking at the market for that kind of reaction. All right, let's get more on this with Andrew Willinger. He's Executive Director, Duke Center for Firearms Law. Andrew, thank you for joining us. We appreciate it. Can we get your reaction to this ruling?
Absolutely. Yeah. So I think, the big takeaway, of course, is that the court here upholds a federal law that restricts people who are under domestic violence restraining orders from possessing firearms. It's an 8-1 decision. So you have 8 justices in favor of that outcome. Justice Thomas is the sole dissenter. And I think, what we were watching for, at least what I was watching for with this case, is sort of how broad the decision would be. And the court seems to settle on something akin to a dangerousness principle, where the majority basically says that when there's some evidence that a person poses a threat of harm to another person, then that individual can be barred from possessing guns consistent with history.
Andrew, is there any reason for any gun protection advocates to maybe read into this that hey, this may create an opening for, more common sense gun legislation?
So I think having just had a chance to briefly skim the decision, my read is that it's somewhat narrow and that the court doesn't squarely confront, even other related issues like banning convicted felons from possessing guns, for example, those convicted of nonviolent felonies, and sort of leaves those for another day. I'll have to dig a little bit more into the various opinions because there are some concurrences as well that might shed light on where some of the specific justices are.
Well, I think it just also then raises the question then what is dangerous? So if you can't sell a firearm to someone who's dangerous, how are we going to be interpreting that through legislation and then through the courts?
Yeah, and my initial reaction to the decision is that again, the majority sort of leaves that question a little bit open. There was some discussion at the oral argument that this specific law doesn't really pose a difficult case because there has to be a finding by a state court judge that somebody is dangerous, is likely to commit domestic violence. So in other words, this would sort of be a case in the heartland of that principle, but there might be edge cases with regard to other types of gun regulation that the court will have to confront. And one takeaway, I think, one initial takeaway from this decision is it wouldn't surprise me if in the coming terms the court did confront some of those issues and decide those questions.
Andrew, what is the Duke Center for Firearms Law?
Yeah, absolutely. The Duke Center for Firearms Law is an academic organization that's housed at the law school here at Duke. And we seek to grow and build the scholarly field of firearms law in the legal academy. We also have a variety of resources on Second Amendment cases and other issues related to gun regulation that we host through our website, blog, and database of historical gun laws, for example.
Go ahead.
Andrew, with that background, and given what I know is, the majority of U.S. citizens favor common sense gun law, I think that's a fact. From your perspective at the Duke Center for Firearms Law, why can't more legislation, common sense gun laws, why can't they be enacted here in this country?
Yeah, so I mean, I think one obstacle to some of these laws has been the test, the legal test that the Supreme Court set forth 2 years ago, almost to the day, in a case called Bruin, which essentially says that the way courts are to evaluate Second Amendment challenges is by determining whether a law is consistent with historical tradition. And that, this decision today is the first we've heard from the Supreme Court since then on the Second Amendment. So their first sort of chance to clarify what that test should look like. And you have today 8 justices saying pretty clearly that, we're not requiring a twin. We're not requiring any kind of exact replica in the historical record to support a modern gun law. So I think that's important and consequential, and maybe to some extent the justices in the majority are concerned that their prior decision was interpreted that way by at least some lower court judges.
How do you think gun laws or the reaction to them evolve as it continues to seem more politicized? And I know that's even crazier to say because it was already so politicized, but so many more of the issues are now politicized. How do you think this evolves in this country?
Yeah, absolutely. To take it back to the Rahimi decision, I actually think this sort of illustrates maybe less of an ideological or political divide as to certain types of gun laws. This is maybe a law that has, we know it has very broad public support based on polling that restrictions on domestic violence offenders. The vast majority of people in the country support those types of laws. And so today we have a decision upholding that regulation at the federal level. And so, I think there will certainly be other cases down the road that will be more of a stark, ideological divide. If you think about something like a restriction on semi-automatic rifles, so-called assault weapons, that would be an example where I would expect the court to really fracture along ideological lines. But that wasn't the case today.
When I was getting my MBA at Duke, Alix, I took one class at the Duke Law School. Big mistake.
Did you run away?
The kids worked super duper hard. Like, I had to work in that case. My little study group wouldn't let me just skate by. They weren't like the business school where we were just punching our ticket to go back to Wall Street.
That's amazing.
These kids were like serious. So anyway, appreciate that.
So you're like, thanks for that, and see you guys later.
Yeah, exactly. All right, Andrew, thank you so much for joining us. Andrew Willinger, he's Executive Director of the Duke Center for Firearms Law.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Okay, so I was mentioning that we have the whole triple witching. Vince Signorella poo-pooed that, so did Paul Sweeney. We have another thing today, and that is ETF rebalancing. So here's like the broad strokes. The State Street Global Advisors Tech ETF has to rebalance. It has about $71 billion in that. And the idea is that you're going to have to buy some NVIDIA and sell Apple, and it could kind of move individual stocks around. So we wanted to see if this was actually a big deal. Not like the triple witching thing. James Seyffart is Bloomberg Intelligence ETF research analyst, and he joins us now. Okay, is it a big deal, this rebalancing?
I mean, I think it's a big deal.
Thank
I kind of
you.
show some of the issues with passive indexing, and there's a lot of things that people like to complain about with passive investing and passive indexing and things like that. And we spend a lot of our time pushing back, saying it's not as big of a deal as people are making it out to be. That said, I like to go back and kind of point out times where sometimes rules can be a little dumb, and situations happen where wonky things happen in the markets, and I think this is one of them. I mean, after market close today, our estimates are somewhere around that this XLK ETF is going to have to sell almost $13 billion worth of Apple and buy about $11 billion of NVIDIA. So, I mean, that's just wonky in itself, I guess I would say, but I'll stop there.
So, James, how do we get to this position? Doesn't XLK, this ETF, doesn't it do this stuff every day? Like, if NVIDIA's going up, don't they buy more NVIDIA? I don't know how that works.
Yeah, so the way most of these passive indices work is they just hold these stocks in proportion to their market cap. So the size of the company, that's how much they hold. It's actually, we can get into the wonky parts of this a little bit too, but it's more about free float market cap, which we can get into in a bit. But essentially, theoretically, as the prices of the values of these stocks go up, the weighting in the fund will go up. But there's things that happen where you have to rebalance. So they rebalance quarterly. Different stocks get moved from different sectors, so they'll come out of the sector ETF. But theoretically, the way XLK works is it takes all the S&P 500 stocks that are in the tech sector and should market cap weight them. But there's these rules from the SEC that have to do with registered investment companies. So all mutual funds, ETFs, for the most part, fall under this registered investment companies ruling, and they have diversification requirements. The problem is if you just allowed these things to be market cap weighted, you have the three largest companies in the world in Microsoft, Apple, and NVIDIA, all around over $3 trillion in market cap valuation. And you'd end up with this fund being 60+% just in those three stocks. Wow. And the diversification rules and the index rules don't allow that. And the way they do that in this case is they just cap the smallest one. So if you're over a certain weight, 5%-ish, and if all of those stocks over 5% add up to over 50%, you cut the bottom one to 4.5% in the fund. So essentially that meant for the last 6 quarters, despite NVIDIA should have had a significant weight, every time it rebalanced, it got sold because it got capped at 4.5%. But last Friday, as of the market close, which is when this fund looks at this, on a free float adjusted basis, NVIDIA was larger than Apple. So all of a sudden now Apple is that smallest stock. So NVIDIA is going to get a bunch of buys and Apple's going to get a bunch of sales. Ironically enough, today, with the way NVIDIA is trading down over 4%, it's actually smaller than Apple. So if the date was today, we wouldn't be having this rebalance.
So, okay, I'm still confused. Can we attribute any of the price action of Apple and Nvidia in the past week to this?
So it's hard for me to know exactly what's going on, right? So there was a massive inflow that went into this fund that's in, there's rebalance flows. Money comes in and goes out, and it's kind of happens over days as far as the rebalance goes. So it's called a reference date. That's the date. We're going to look at all the information from this date, and we're going to use that information to do the rebalance. So in that case, it was last Friday, June 14th. The actual rebalance is going to happen today after market close. But the people making markets know this is going to happen, right? It's not like this stuff happened and it closed on last Friday, and then no one's paying attention to this or trading around what's going to happen with these tens of billions of dollars being traded. Things were happening Friday last week and all along this week. They were preparing for these trades. So it's most likely that Spider and anyone else that's tracking this index has the trade set up and lined up so they can match the underlying index. That's the ultimate goal of these passive funds. They want to track the underlying index. In this case, XLK, it's the large cap stocks in the S&P 500 that are in the tech sector.
Have we seen this before? If this feels like I haven't read this, seen this, dealt with this before. Is this new? Unique?
Yes and no. So there are instances where wonky things like this happen. In many cases, they're with smaller stocks, though. So I've written in the past about some dividend funds, and there's wonky issues with dividend funds where if you're weighting it by dividend yield rather than market cap like this fund is weighted, as the price of the stock goes down, your dividend yield goes up. So basically what happens in some cases with those dividend yield funds or some other funds, some cash flow type funds, as they'll do cash flow yields and things like that, as the price of the stocks go down, it looks like their valuation metrics are getting better, but it's partially because the stock price is going down so much, and there's oftentimes reasons for that. And then many of these funds have limitations. So if it goes below a certain market cap, we can't hold it. So all of a sudden they build up these massive positions, and then it gets too small, and then they're forced to dump it. And that's happened in the past. But it's rare. This is the first time I've ever seen it happen with a large cap ETF in a fund of this size, again, $71 billion, like Alix said at the beginning of this. So yes, it's rare. So that's why I said I like to point it out when it happens, but it doesn't usually happen. And the only reason it's happening is because we have this unique situation where they've taken a bunch of names that used to be in the technology sector and moved them out in a reclassification. So Visa and MasterCard are no longer in there, which are big funds. Right. Obviously, Google and Meta and other ones have left. So all of a sudden, you left with this really top heaviness at the top of the tech sector in these three stocks, and that's causing a lot of wonky things to happen. Now, the thing I'm watching is right now, like I said, if the reference date was today, this rebalance wouldn't be happening. Nvidia would be the one being capped at 4.5%. The next rebalance is September. So if Apple manages to stay larger than Nvidia on a float adjusted basis in September, we're going to have the exact reverse of this. So usually these index providers, in this case S&P, and the ETF providers, in this case Spider or State Street, they try to keep the indexes exactly the same because they want continuity over time. I wouldn't be surprised if they look at kind of changing the rules about how they meet those diversification requirements rather than just arbitrary capping, chopping off the third largest here. So that'll be something to watch in the next few months. But if they don't, we could come to September and see a reversal of this, or if Microsoft is somehow smaller than Nvidia and Apple, that will be the one that gets sold, and Apple will be bought. It'll be very interesting to watch what's going to happen. And this is an area that hedge funds are paying very close attention to in making markets. You asked if it's actually impacting markets. There are whole teams out there that are watching for what these behemoth passive products are doing and what they're going to have to do on rebalance dates and basically prepping for it.
I want to see what water cooler talk is with him and Eric Balchunas.
Oh, geek to the max. Geek to the nth.
And they're like, hey, bro, let's check out this ETF and look at this flow. It's so cool. I just joke because you guys are so smart and so insane when it comes to all of these details with ETFs. But this is really helpful, and we appreciate it. And thank you very much. And it really helps to understand what happens with an NVIDIA and an Apple when you have this kind of reshuffling, right? $71 billion, that ETF reshuffling, that's not nothing. And I'm looking forward to the Russell 2000. I feel like we should definitely talk about that next week, too. Especially because small caps have just not been able to keep up. And any keep up they have is super micro at that point.
Exactly.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Another headline that crossed earlier today is that Canada is apparently preparing tariffs on Chinese EVs after the U.S. and the EU did something relatively similar. We wanted to get more on that with Steve Mann, Bloomberg Intelligence Global Autos and Industrials Research Analyst. Hey, Steve, walk us through so far what we know on this.
Yeah, so Canada is basically following what the U.S. and the Europeans have done, which is to slap potentially 100% tariff, another 100% tariff on Chinese-made cars coming into Canada. Now, the impact is muted. First of all, Canada sells about 1.7 million vehicles a year, compared to around 16 million in the U.S., 30 million in Canada, in China. So the market is relatively small. I think the overall purpose of doing that is really to close the back door in the U.S. Mexico Canada Free Trade Agreement, to make sure that Chinese cannot bring cars into the U.S. through Canada.
Okay. Talk to us about the Chinese EV market, Steve. How big is it? You say you have a SAR there of 30 million cars a year. What's the share of EVs in today, and kind of where do you think it's going to go?
Yeah, it's pretty big. It's as much as 25% now.
Wow.
Of annual sales. So they've also, as you know, there's a lot of capacity in China, EV production capacity in China, and there's a lot of players out there. A few of them trade here actually: NIO, XPeng, Li Auto, and so the government, just to prop up consumer spending, have actually rolled out some incentives to sell more battery electric vehicles in China, and some of that incentives are on trade-ins, extra credit on trading in their ICE vehicles for the battery electric vehicles. So 25% now, probably expected to grow through the remainder of this year.
So here's my question. If I'm a Chinese EV company, can I then just go through Mexico? Because I appreciate this closes the window from Canada, so I can no longer really import into Canada and then through to the U.S. because the tariffs will hit. But in Mexico, I still can, right? So why not just ship all the EVs in there, free trade agreement, ship all the EVs into the U.S.?
That is true. But just like what Canada did, I think they're going to close that back door as well at some point. But look, the Chinese automakers, especially like BYD, has made it clear that they don't have any interest in entering the U.S. market at the moment, and it's difficult. It's not like you can say, oh, I'm coming in and selling cars in the U.S. and then you're able to gain a lot of customers just by doing that. They're gonna have to build a distribution network. They have to build a service network, and more importantly, given the geopolitical wrangling that's happening between the U.S. and China, I'm not sure if a lot of the U.S. Car consumer are ready to buy a Chinese car at the moment.
What do the Chinese automakers say, Steve, about these tariffs in the U.S., in the EU, Canada? I mean, to what extent, how impactful are these to their sales, and what are we hearing from these Chinese automakers?
Yeah, I think at the moment, zero impact from the tariffs in the U.S. and Canada. There will be some impact from the tariffs in the EU. They do have about 2-3% market share in the European Union. But the tariffs is not as big as it is in the U.S. It's upwards of 38 to 50%, and it really depends on the automaker. For example, Stellantis, they do plan to import some Chinese-made EVs into Europe through their new joint venture with Leapmotor. So because Stellantis also has plans with Leapmotor within this joint venture to build cars in Europe, the tariffs is a little bit lower. So tariffs are different for different automakers within the EU. So the penetration rate will be impacted, but I think overall at the end of the day, Chinese will still able to sell cars in the EU, but at a higher cost, and gives the incumbents some room to actually grow
What do we think the differential would be? Like, a China EV into Europe would cost X, and Volkswagen EV would cost Y. Like, what do we think that differential will actually wind up being?
Yeah, it ranges, I think, between 30 to 50% cheaper. The Chinese EV will be 30 to 50% cheaper.
Even with the tariffs or without the tariffs?
Oh, no, without the tariffs. So first of all, without the tariffs. And I think what the tariffs are trying to do, and not only the tariffs, any cars that actually comes into the EU from China will have to meet the local safety requirements. So there's going to be some changes that the Chinese automakers will have to make to their cars to meet those requirements. So overall, with the changes of vehicles, with the tariffs, what the EU is trying to do is make ensure that the prices of the Chinese car, when they do hit the ground, will be very competitive to the EVs made by the local automakers there.
Hey, Steve, what's the latest thinking coming out of Detroit about electric vehicles? Obviously, a couple of years ago, they really started ramping up aggressively. Then demand seems to have faded here, so they're pulling back on some of their plans. What's the latest thinking from our U.S. automakers about their move to EVs?
Yeah, I was just in Detroit last week, and I think the consensus is that battery EVs are here to stay. Some of the estimates that we saw a few years ago when we're thinking about BEVs going to hit 75-80% of the market is not unlikely to get there anytime soon. And if you look at global market, especially in the US, we're going to have a mix of powertrain, but BEV will grow. I think some of the estimates out there, including ours at BI, we think the US market will probably hit 25 to 30% penetration rate by the end of the decade. So from about 9% today. So different automakers are taking different strategies. If you look at Stellantis, you look at GM, they're full on. They're still launching a lot of EVs in the next couple years, more affordable EVs. Ford is taking a step back, right? I think it's not a bad strategy. They know the technology, they know how to build EVs, so it doesn't hurt. It saves cash for the time being until they see critical mass, and they can easily come back to the market.
All right, Steve, we appreciate it. Thank you so very much, Steve Mann, Bloomberg Intelligence, Global Autos and Industrials Research Analyst. You have to wonder, what policy, though? We were talking to the to Helion, right? And they used to make basic trucks, like EV trucks, right? And they said, look, the policy just wasn't there, and the demand just wasn't there, and we just couldn't sustain that part of the business. If we get a different administration, does that change? If we get different ruling and the EPA does different things, does that also change? Like, what part of policy plays in with demand? Yeah,
I think what we learned and what we're still learning is it's got to be price competitive.
Yes.
The charging storage situation has got to be vastly improved. And, I also think there's still a political thing there that I'm not sure they're going to be able to get over.
Yeah.
I think there's going to be some kind of political divide there where people are going to be like, I'm just not into electric.
Right. It's going to be like a political stance.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Alix Steele and Paul Sweeney. We are live here in our Bloomberg Interactive Broker studio. We're streaming live on YouTube, so you can head over to youtube.com and search Bloomberg Podcast, and that's where you'll find us. We just heard Vinny and Charlie talking about existing home sales, 4.11 million. That's off slightly from the prior period. I went back and did the old GP function and set the tab to max to see how far back we could go, just to put that 4.11 million homes sold in the month in context. And we usually do since like 2000. about 5.3 million. So it's definitely below kind of where we were and higher interest rates and all that kind of stuff, and just people getting priced out. I wonder what that means for mortgage-backed securities market. Mortgage-backed securities, the Bloomberg index of mortgage-backed securities, total return off about 0.14% here year to date. So what do we do here in the back half of the year? Let's check in with Erica Adelberg. She covers all this MBS stuff for Bloomberg Intelligence. She joins us here in our Bloomberg Interactive Broker studio. So as we sit here mid-year, Erica, how do you think about the back half of the year for mortgage-backed securities?
Well, it's been a pretty interesting first half of the year, so let's just talk about that for a minute. As of 2 months ago, mortgages were down more than 2% in total return, and on an excess return basis versus treasuries, about 75 basis points. And since the Fed reinstated their kind of one-sided market where they probably won't tighten, but they're hoping to ease at some point this year, the market's recovered great. So, we're back to almost flat, as you said, for the year on total return. We're almost flat in excess returns, too. So what happens for the rest of the year? We think we could probably hold on to this. We don't think there's tremendous momentum right now. You would think there would be, given the 2 months. But the problem is we're still on hold awaiting the Fed. And supply is great because there's not a lot of new homes, but net supply is actually increasing because what's not happening in existing homes is getting put into the new home market a little bit. So we're actually seeing some increase in net supply of mortgages, especially when you take into account the fact that the Fed is, not buying. In fact, they're allowing their portfolio to run off, which contributes effectively more supply.
Well, that's what I was wondering. Who's buying these things?
It's mostly money managers right now, and they're not the most reliable buyer in as much as if spreads get too tight, for instance, they may pull back a little bit. We're seeing some of the largest money managers right now being quite overweighted the sector, so that might limit the amount of dry powder they have. Should they get concerned about the sector for one reason or another, or even just if net supply does pick up.
Someone comes up to you at a cocktail party and says, and when someone comes up to you at a cocktail party and says, what's a 30-year mortgage these days? What ticker do you put into your Bloomberg terminal?
I generally put in, if I want a very short-term thing, I put in the
I want a 30-year fixed.
30-year fixed. MB30 or the Freddie Mac. Yeah.
All right, good. All right, that's all I needed. All right,
that's the fastest one to type. So.
Okay, MB30. So how does the mortgage market react to kind of what the Fed's doing? How quickly does that work? How tight is it? If we're going to get the Fed start cutting into the back half of the year, does the mortgage market anticipate that? Do they lag? How's that work?
It really doesn't anticipate it much.
Okay.
It's going to be based basically on what happens with the 10-year. And the 10-year will be a little bit more forward-looking than short-term rates. It may look to what the Fed's going to do next year, for instance. But basically, right now, I think our rate strategist thinks that the 10-year is going to finish the year around 379. That's less than a 50 basis point rally from here. So we really don't expect mortgage rates to finish inside of 650 at the end of the year anymore.
I go back to who's buying again. Are banks buying mortgage-backed securities, and will that change?
That's a good question. Banks, unusually for the banks, who are usually a huge fan of mortgage-backed securities, when the Fed started tightening, they were facing a lot of profit and loss, unrealized gains, losses on their balance sheets, and they were worried about volatility as well. So, after SVB collapsed, for instance, they just stopped buying mortgages altogether. In fact, they didn't even reinvest their pay down. So they were running off their portfolios too. And then you combine that with the fact that, the Fed, it's a lot of extra supply for the rest of the market to absorb. They have leveled off now. They've started at least apparently reinvesting their pay downs, so that's a little bit of a less negative technical for the sector, but they really haven't come in any significant size. We think that, there are two things that might happen. One is they just may get more confidence once the Fed starts to ease, or at least starts really saying that they're about to ease. But we also think they might want a less disinverted yield curve, or a less inverted yield curve. Double negatives, get it mixed up.
Right.
So, sure, yeah. So there's not a lot of incentive to them invest in a longer term security if it's yielding less than their funding right now.
When I talk to credit analysts, they talk to us across about how tight credit spreads are. Is that a similar situation in the mortgage-backed securities market?
When you look at the OAS of the mortgage market right now relative to the corporate market, it looks like relative to the past 10 years that mortgages are really quite cheap. Corporates have done super well. But if you look back to pre-financial crisis, before the Fed held as many mortgages as they do on their portfolio, we're actually, at a point where, maybe mortgages don't look so cheap to corporates anymore. They used to trade at a wider range. So it kind of all depends on your perspective and how much you think, the Fed may come back in or not as a buyer of last resort if something goes wrong in the mortgage market.
So at the end of the day, really, we have to think about the affordability part of this equation, right? Like it is the who's buying, so that's part of it, but the affordability, what do you think gets everything more affordable and kind of gets this market really moving?
Yeah, I mean, the funny thing is, like any bond investor, I always like to say what's good news for consumers and the economy is often bad news for bonds. So, the bonds rally when the economy's not doing well, and supply for mortgages, actual supply, not just net supply, would pick up if the housing market got more affordable. So we don't necessarily want that. I mean, mortgage originators do, but mortgage investors may not. But I think it's going to have to take, we're going to have to wait for rates to fall down, because home prices today, the existing home prices, hit a new record at $419,000 for the median home price. And although inventories are building a little bit, if anything, they'll probably only build enough to kind of stagnate prices. So what it takes is median incomes, over time growing, and rates coming down over time.
I mean, this great chart about who's buying, who's selling. The Federal Reserve year to date, minus 90. Is that minus 92 billion, or is that a percentage? Because then mutual funds are buying, dealers are buying.
That's minus 92 billion in the first quarter. But if you look at, I do a chart, and I think you're actually looking at it.
Yep.
Of the Z1 holdings from the Fed.
Yep.
And until now, from March 22 until now, when the Fed and the banks were running off their portfolios, households, it's called households, were the only ones buying, actually. They were really making up the difference. But the problem with that household number is it's a little inscrutable, because it's actually the plug that the Fed puts in there for anybody who doesn't fit into the insurance or the money manager or the mutual fund. So we know it's a lot of private net wealth. They call it households. We know it's a lot of a few hedge funds. But yeah, they let their portfolios run off last month, which is interesting. It's a trend to watch, but not a trend to be too concerned about yet.
All right, so I got the MB 30-year mortgage, 6.94%. So the good news is we're below 7%, but we're nowhere near me refinancing my 6% mortgage. Yet. So I'm holding on to this thing. Erica Adelberg, a Chief Mortgage-Backed Securities Strategist for Bloomberg Intelligence.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.